Welcome to Smart Stock Watch. Today is April 24th, 2025, and we're diving into Chipotle's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, Chipotle has just released their Q1 2025 results. Can you give us a brief overview of the company's performance this quarter?
Absolutely. Chipotle reported a total revenue of $2.9 billion, marking a 6.4% increase year over year. However, comparable restaurant sales saw a slight decline of 0.4%. Despite these mixed results, the company managed to increase its operating margin to 16.7% from 16.3% last year.
Revenue and profitability overview. Let's start with the top line. Chipotle reported a total revenue of $2.9 billion for the first quarter of 2025, which is a 6.4% increase compared to last year. John, what are the key drivers behind this revenue growth?
The revenue growth was primarily driven by new restaurant openings, including 57 new company-owned locations, 48 of which feature a Chipotlane. These drive-through lanes are enhancing guest access and convenience, contributing to increased sales and margins.
Despite the revenue increase, comparable restaurant sales decreased by 0.4%. What factors contributed to this decline?
The decline in comparable sales was mainly due to a 2.3% drop in transactions, although this was partially offset by a 1.9% increase in the average check. Factors like weather and a slowdown in consumer spending played a role in the reduced foot traffic.
Operational efficiencies and future outlook. Chipotle's operational strategy seems to be focused on expansion and digital integration. Can you elaborate on their progress in these areas?
Indeed, Chipotle opened 57 new restaurants this quarter, with 48 featuring Chipotlanes. These drive-through lanes are proving successful in boosting sales and margins. Additionally, digital sales accounted for 35.4% of total food and beverage revenue, highlighting the company's strong digital presence.
Looking ahead, what is Chipotle's outlook for the rest of 2025?
CEO Scott Boatwright expressed confidence in returning to positive transaction comps by the second half of the year. The company plans to open 315 to 345 new restaurants in 2025, with over 80% featuring Chipotlanes, which should support their growth strategy.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 28 for Chipotle based on a survey of 14 analysts. How did the actual results compare?
Chipotle reported an adjusted EPS of 29 cents, which is a slight beat over the forecasted 28. This represents a 7.4% increase from the previous year's adjusted EPS of 27 cents, indicating solid earnings performance despite some operational challenges.
What does this EPS beat signify for investors?
The EPS beat suggests that Chipotle is effectively managing its costs and driving profitability, even in a challenging environment. This could bolster investor confidence in the company's ability to navigate headwinds and deliver value.
Cost management and financial health. Let's talk about cost management. How did Chipotle perform in terms of managing its expenses this quarter?
Food, beverage, and packaging costs rose to 29.2% of total revenue, driven by inflation and higher usage of certain items. Labor costs also increased to 25% of revenue due to wage inflation. However, Chipotle managed to decrease general and administrative expenses significantly, which helped offset some of these cost pressures.
Chipotle also repurchased a substantial amount of stock. Can you tell us more about this?
Yes, Chipotle repurchased $553.7 million worth of stock at an average price of $54.15 per share. This move reflects the company's confidence in its financial health and commitment to returning value to shareholders.
Key takeaways. In summary, Chipotle's first quarter of 2025 showed solid revenue growth and an EPS beat, despite some challenges in comparable sales. The company's focus on expansion and digital integration, along with effective cost management, positions it well for future growth. John, any final thoughts on Chipotle's investment prospects?
Chipotle's strategic initiatives and strong financial management make it a compelling investment, especially with the planned expansion of Chipotlans. Investors should keep an eye on how the company navigates consumer spending trends and cost pressures in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Chipotle's performance in the comments below. Until next time.